This free resource is brought to you by Western Nevada Title Company, trusted by agents and brokers since 1983. Learn to invest in real estate even if you're not rich. Many people believe you need to be wealthy to start investing in real estate, but that's simply not true. There are strategies for every budget. Think again. House hacking is a powerful real estate strategy that allows you to live in one unit of a multi-unit property and rent out the remaining units to tenants. The rental income from your tenants helps to offset or even completely cover your monthly mortgage payment. This can make homeownership more accessible, significantly reduce your living expenses, and help you build equity faster than you would with a traditional single-family home. Let's say you want to buy a fourplex with a total mortgage payment of $4,000 per month. Instead of buying a single-family home where you would be responsible for the entire mortgage yourself, you decide to house hack. You live in one of the units and rent out the other three. You rent out Unit A for $1,500 a month. You rent out Unit B for $1,200 a month. You rent out Unit C for $1,200 a month. The total rental income you collect is $3,900 per month. This amount covers nearly your entire $4,000 mortgage payment. In this scenario, your personal out-of-pocket housing cost is just $100 per month, a significant savings compared to paying the full $4,000 mortgage or the typical rent in your area. This strategy essentially allows your tenants to pay for your home, freeing up your income to be used for other investments or savings goals. There are many ways to invest in real estate, each with its own advantages and disadvantages. Here are 3 common strategies. Rental properties. This is a classic buy and hold strategy where you purchase a property and rent it out to tenants. The primary goal is to generate steady passive income from the monthly rent while the property's value potentially appreciates over time. Example: you purchase a single-family home for $300,000. After a 20% down payment and closing costs, your monthly expenses, mortgage, property taxes, insurance, and maintenance, come out to $1,800. You rent the house out for $2,500 per month, leaving you with a positive cash flow of $700 each month. This income helps you build equity in the property while providing a steady stream of cash. Flipping houses. This is a more active, short-term strategy that involves buying a distressed or undervalued property, renovating it to increase its value, and then selling it quickly for a profit. The goal is to generate a large one-time return. Example: you buy a fixer-upper for $250,000. You spend $40,000 on strategic renovations like a new kitchen, updated bathrooms, and fresh paint. After a few months, you sell the house for $350,000. Your gross profit is $60,000, $350,000 sale price, $250,000 purchase price, $40,000 renovation costs. This quick, large profit can then be reinvested or used for other purposes. Real estate investment trusts. REITs are companies that own and operate income-producing real estate. They allow you to invest in a portfolio of properties, such as apartment buildings, office complexes, or shopping malls, without the hassle of direct ownership. You can buy and sell shares of a publicly traded REIT just like a stock. Example: instead of buying a physical property, you invest $5,000 in a publicly traded REIT that owns a collection of apartment buildings across several major cities. The REIT generates income from the tenant's rent and pays out a significant portion of its profits to you and other investors as dividends. You don't have to deal with tenants, repairs, or property management, and you can liquidate your investment by selling your shares at any time. Owning real estate can create cash flow. Cash flow is the net income you receive from a rental property after all operating expenses have been paid. It is a critical metric for long-term rental investors, as positive cash flow ensures the property is self-sustaining and provides a steady income stream. Example: imagine you own a duplex with a monthly rental income of $3,000. Your monthly expenses include a mortgage payment of $1,500, property taxes of $300, insurance of $150, and a reserve for maintenance and vacancy of $250. Your total monthly expenses are $2,200. The cash flow is calculated by subtracting your expenses from your income, $3,000 income, $2,200 expenses, which equals $800 positive cash flow. This $800 is a consistent passive income that goes directly to you. Now, let's talk about appreciation. Appreciation refers to the increase in a property's market value over time. This is a long-term benefit of real estate investing, as properties tend to gain value due to factors like inflation, a strong local economy, improvements to the property, and high demand in the area. Example: you bought a house 5 years ago for $250,000. Due to a new tech company moving into the area and a shortage of housing, the market has become very competitive. You get the house appraised, and it is now valued at $350,000. The property has appreciated by $100,000, which is the amount of equity you've gained from its increase in value alone, not including the equity you've built by paying down the mortgage. Don't forget about real estate tax deductions. Owning real estate offers a number of significant tax benefits that can lower your taxable income and save you money. These deductions are typically available to landlords and can include a wide range of expenses associated with managing and maintaining a rental property. Example: you own a rental property, and throughout the year you have the following expenses: $12,000 in mortgage interest, $3,000 in property taxes, $1,500 in insurance, $2,000 in repairs, for example, a new water heater, and $1,000 for a property manager. Additionally, you can deduct the depreciation of the building itself, which for a residential property is spread out over 27.5 years. By using these deductions, you can significantly reduce the amount of income you report to the IRS from your rental property, resulting in a lower tax bill. Starting out can feel overwhelming, but you can get a head start by learning from common mistakes. This will save you time and money. Let's look at the top pitfalls to avoid as a new investor. Mistake number 1, not doing enough research. Go beyond the property and investigate the neighborhood. Check local school quality and crime rates, as a great house in a declining area is a poor investment. Mistake number 2, underestimating expenses. Remember to budget for taxes, insurance, and maintenance, not just the mortgage. These hidden costs can quickly erase your profits if you aren't prepared. Mistake number 3, letting emotions drive your decisions. It's easy to fall for a home's charm, but investing is a numbers game. Let the data, like cash flow and potential return, guide your choices. Real estate investing can open doors to true financial freedom. Imagine creating passive income that works for you, so you don't have to. This isn't just about getting rich. It's about reclaiming your time, allowing you to spend more moments with loved ones and enjoy the lifestyle you dream of, free from the daily grind. With the right knowledge and a consistent approach, this is achievable for anyone. You don't need a huge pile of cash to begin. You can watch your investments grow and enjoy the rewards of your efforts, no matter where you start. Think of it like planting a small seed that, with care, grows into a strong tree providing for you for years to come. The key is to start small, stay consistent, and build your future. If you're ready to learn how, we're here to guide you. Mastering these proven strategies is your key to unlocking faster sales and becoming a go-to agent in Nevada's competitive real estate market. But your journey to excellence doesn't stop here. The market is always evolving, and continuous learning is crucial for success. That's why we invite you to explore our comprehensive resource hub. Subscribe for the next video in this series, where we'll dive deeper into analyzing your first deal. We'll break down the numbers and show you exactly what to look for so you can invest with confidence. Visit our website at WNTCO.com and navigate to our resource page. You'll discover a wealth of knowledge, from downloadable checklists to articles on the latest industry trends. At Western Nevada Title Company, we're more than just a service provider. We're your dedicated partner, committed to your growth. We've been proudly supporting real estate professionals since 1983.